Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Christopher Malter, CEO of Global Accelerated Ventures, to discuss the future of health tech innovation and where investors are putting money into the industry for 2020. It's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. Happy to be here.
Great, thank you. And why are successful companies in the US, why are they struggling to access capital to grow?
Well, I think a couple of reasons. One is since the recession of 2007, 2008, traditional methods have really dried up a lot. Banks, they charge extremely high rates, and it's just very difficult more and more to get funding that way. I think another reason, which is actually more compelling, is venture capital, PE money. It's just taking longer for companies to get where they need to be. So, if you have a traditional company that is looking for a Series B, they can't access that kind of money or that kind of capital sooner because one, it's expensive via PE and VC money. And then two, the requirements are, you have to be EBITDA minimum, EBITDA 2 or 3 million. So if that's the case, what's happening is we're now sort of in alphabet city, if you will. Now it used to be where it's Series A to C, and then there's an exit. Now it's E and F. So what does this mean? It means that there's longer exits, and the realization to investment is longer, and then there's more risk.
What are the top industries for investment with the venture cap and private equity communities?
Well, I think it's funny because I think the pandemic has really changed things, right? So you have fintech and health tech is really, really important, really hot industries. Traditional blue chip industries. I mean, you see what's happened with, so for example, in Boeing, right? Or Ford, the automotive industry. Those traditional industries have sort of, faded away, and what's replaced them? Tesla, right? Amazon. It's just amazing. So for us in our world, we primarily deal with fintech and health tech. And the pandemic has really fast forwarded and accelerated the acceptance of digital assets, especially in these specific areas, in a traditional rudimentary process or workflow. So what has happened is you have really a shakeup that has occurred within the industry. So fintech and health tech is very, very hot right now, along with others, but it's really digital assets that are really leading the way.
Tell us more about the future of health tech innovation and where investors within that sector are putting their money specifically for 2020.
Yeah, sure. So, for example, health tech is one of the major leaders for us. My background is life sciences, and I've been in venture for 25 years. And basically, to make a long story short, we are hedging our bets on the integration of AI and predictive analytics, machine learning in those traditional avenues or verticals. So, and it's all about impact. So, for example, we just launched a company called COVAX 2020. It was initially created to address the opioid epidemic, and giving physicians at the point of care a dashboard where AI would be integrated, and to ultimately offset the opioid epidemic, to offset prescribing habits, give them that dashboard. And what we did was actually pivoted. We actually created for the CDC. We pivoted, and now we are using that for contact tracing for COVID-19. So I guess the best way to describe it is traditional healthcare and the delivery of healthcare did not include these sort of AI technologies, and now it is because people are demanding it.
Yeah. Well, and that's a good thing too, because if anything, healthcare certainly needs to be revitalized and revamped, particularly in the United States. So the acceleration of these trends is a good thing, in my opinion. So to wrap up here, what should investors look for in mid-sized companies, and why is the location of companies a consideration for investment? Because again, COVID-19 has certainly changed that as well when it comes to location.
It is. So, I think you have metrics. Traditional metrics are still important. Management teams, robust technology, strategic partners, access to capital. All those things are incredibly important. But to your point, I think from a global perspective, we've just sort of, reduced the world with digital assets. So basically, I can do today what I couldn't do yesterday through technology and AI. So I can have impact from a world and a global perspective in healthcare, which we do. So, for example, going back to COVAX 2020, we are literally we are launching this globally in France, throughout Europe, and of course the U.S. But we're here in the New York area. So really, location doesn't have a big issue anymore. It's really about digital assets.
That is certainly true. Thank you so much for joining us on Trade Talks.
Thank you, Jill.
All right, you got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.